Whether you are a beginner trader or an intermediate trader, the likelihood of you learning something that does not work in the market is very high, because social media is full of traders that are pretending to be profitable, yet they've never made a dime from trading in their life. And this is coming from someone that has been trading for 5 to 6 years and has made multiple 6 figures trading from the markets. But it wasn't always like this. My first 3 years were unprofitable and break even, and only then did it click and I became a profitable trader. But this is the reality. A lot of you are going to be wasting so much time because you are going to be learning the wrong things or applying it in the wrong markets. And so today we're going to go over a tier list of what the best strategies are and what the best market to trade is, because like this you will be able to understand exactly where you are at right now in your trading and what you should be focusing on the most. And no, I'm not going to say just that support and resistance and smart money concepts don't work. I will tell you reasons as to why that is. So let's go onto the computer and let's break it all down. I've gathered the most popular trading strategies out there, and I've also gathered all of the markets that you would be able to trade. We are going to run down all of the reasons why you should or should not trade these trading strategies and what market you should be trading depending on your skill level. Because believe me, there are markets here that people use because they come with the wrong mindset into trading, which is they believe they're going to get rich quick, and so they trade one particular market that we are going to talk about, and then they just end up blowing their full account. So first, let's talk about trading strategies. Let's talk about indicators. Now, I've never really liked indicators. The reason why is because they always seem to be lagging. The indicator wants price action to do something and then you execute. While when you are trading, you need to be able to forecast exactly what the market is going to do in terms of price action instead of having an indicator tell you what price action is doing. And so to me, when I'm thinking about indicators, I think about overbought, oversold, RSIs, VWAP, so on and so forth that can be good, but you can't just trade a moving average in of itself. How many strategies have you seen that are, once this moving average and this moving average intercept, that's when X, Y, and Z happens. But let me tell you, all of those are unprofitable, and that is why you can't automate it. So think about this. If it would always be when these two indicators cross, that would be very easy to put into a bot. Why are there no profitable indicator bots? It's because it's lagging price action. And so I would say that I would put the indicator trading right in the D. I don't think it is good, especially if you are just using indicators in of itself and you are not using other price actions such as raw price action or any other concept to give you a bias, to give you a better execution in order to forecast what these indicators are going to do. So indicators are something that people teach because they are very accessible basically to everyone. Everyone can put an RSI or a VWAP on the charts, but not many people can become profitable from it. And so I would put it in the D category. Now, smart money concepts. I have it's not even a love-hate relationship with the smart money concepts. I really do believe that if your stop loss is below 3 pips, you are an unprofitable trader. All of these traders that you've seen trading smart money concepts and they're trading with a tiny stop, in 5 years time, they will not be doing that. And the reason why is because it does not even work for them. Even before, there were a lot of big smart money concepts communities, yet all of these mentors are now doing something different. And that maybe tells you something of what was happening before. Maybe what you thought was working in reality was just a mask, right? And I see that happening a lot with smart money concept traders. And I do believe that smart money concept is highly unprofitable for 95% of traders that trade it. Because again, you are waiting for too much confirmation, you are not understanding, you are probably just using gibberish, and you have too tight of a stop loss, and you're going for way too high of a risk to reward. And that is why I really don't like smart money concepts. Now, I do have to preface this, that there are people that trade smart money concepts and are profitable. The reason I say that the likelihood of you becoming profitable with it. And you need to understand who I'm talking to. If you are unprofitable, a beginner or an intermediate trader, you should not be trading smart money concepts, because you're going to have a lot of losing streaks. Because if you're aiming for a 1 to 10 risk to reward, the market is not going to give you a 70% strike rate. It's going to give you like a 20% strike rate, which means every single winning trade that you take eventually results in the next 3, 5, 6 trades being losers. And I know, because I have a lot of students that traded smart money concepts, and everything they said was it was too complicated. The market never reached the areas that I wanted it to reach. I was always stopped out, and I always had huge losing streaks. And so to me, smart money concept, would I put it in the same one as indicators, or would I put it in C? Oh my god, I'll put it in C, just because it already gives you an indication on why the market moves. It focuses a lot on liquidity, market structure, so on and so forth, which means that smart money concept does teach you some valuable things. Now, is this what you should learn when it comes to being a beginner or an unprofitable trader? Absolutely not. I don't think that smart money concepts is good for any sort of beginner. And believe me, anyone that I see with a tiny stop in flexing that they had a 1 to 20 risk to reward, I know that they are very, very likely an unprofitable trader. Because what these people don't show you on social media that trade smart money concepts is that their 1 to 10 risk to reward is the same thing as, for me, my 1 to 2, because I held with full volume, while they take partials at 1 to 1, which completely diminishes their returns. And so, yeah, SMC, I would give it a C. It's fine. Now, let's go into ICT. Now, I know what is coming there. It's always the same thing. So ICT, I believe, goes into the S category. Yes, I have to give ICT the S category, because this is the thing. You need to understand that I'm giving the concepts the S category. I'm not giving the author of the concepts the S category. This is not about authors. This is about concepts, right? And so the reason I'm giving it an S category is because the way I learned ICT, first of all, the education is all for free on YouTube. If you know how to navigate through the education, you can learn a lot. And it gives you so much confidence in, I understand how the market moves and why the market moves. And when it's obvious that the market is going there, that your trading is completely going to change. And that is what I felt with myself. Once I started learning ICT, and no, I did not only learn from the YouTube channel, I also paid ICT students to teach me how they were doing it. They would have mentorships, they would have courses. I would pay for their courses to learn how they implemented ICT. And that's how I really, really became profitable. But the fact that the foundation of all of these courses that I purchased was ICT, and it comes to show how good of a strategy ICT can be. Now, I do have to preface this, that if you are a beginner, the best way for you to go about it is to have someone hold your hand when you are learning ICT concepts. ICT is not selling a mentorship anymore, but a lot of its students are. For example, the Simple Trading Edge, a lot of the foundational knowledge is based on ICT. And again, I've made multiple 6 figures in the markets, which has now allowed me to condense it down into a couple of concepts that I use and be able to explain it, and already gotten dozens and dozens of traders profitable and funded with payouts, right? But I do believe, from what I've seen and from the people that I talk with, ICT is probably one of the authors and even the concepts that has changed trading the most for retail traders, at least from the ones that I personally know. It's no wonder that most traders with the highest amounts of profits from prop firms are ICT traders, or have based their knowledge on ICT. And that should tell you something. And that is why I believe it belongs in the S category. Once again, I'm not talking about the author, I'm talking about the concepts. Now, let's talk about raw price action. So I've traded raw price action before, and actually it was one of the times where I did feel very, very confident in the way that I was approaching the market. And so I would actually have to give raw price action, I'll put it up there afterwards, I'll have to give it a B. The reason I have to give it a B is because the people that are able to teach raw price action are few to none, right? Because there's so many people that simply teach raw price action by showing you things in hindsight. They never called a trade in their life. And funny story, before I used to think that a mentor should not call any trades because then the students are not learning properly, but I've actually completely changed my mind. Now, inside of the Simple Trading Edge, if I enter any trade, I'm saying that I'm entering in a trade because that increases the confidence that the students have, not only in me, but also in the strategy. But everything that I've seen in raw price action has simply been people talking in hindsight on what happened, never calling the markets live. And like that, it's easy. Like that, you can make indicators seem profitable, SMC seem profitable, raw price action seem profitable, or even ICT traders seem profitable, right? Hindsight is super, super easy, but I haven't seen many people trade raw price action consistently. But what I do like about raw price action is that it focuses on the most important component when it comes into trading, which is understanding price action, understanding trend, understanding market structure, understanding manipulation, understanding distribution, understanding accumulation. So I do believe that raw price action has a place. You just have to be able to filter out very, very well who is teaching you the raw price action. So I will give it a B tier. Now, when it comes to patterns, I believe that patterns, they should be going with indicators. Am I going to put Okay, I'll put patterns in the same place as SMC because I believe that patterns are very subjective. Because some people will grab a trend line from 2019 while other people are going to grab a trend line from 2020. So if there is no consistency between what one person is seeing and what another person is seeing that are trading the same strategy, and both are trading patterns, yet one sees an ascending channel from, as I said, 2019, one from 2020, that means that it's not consistent. And so you need to find a way, if you're trading structure, to pair that with raw price action, to pair that with other things that will allow you to be able to read the market. And I've always thought that indicators is something that are very, very, very commonly used in order to actually manipulate traders out. And I haven't met any seriously profitable patterned day traders. I've met good SMC traders, I've met good raw price action traders, I've met good ICT traders. I've never met that good of a patterns day trader. And so with that, I would say I would have to give it a C tier. It's not horrible. It's a good way to get introduced, but understand, hindsight is super, super easy to call. If you see an ascending channel and you see that the market dropped lower, well, then obviously you are going to be able to see that there was a 3-touch ascending channel, but I haven't seen any consistency from the traders that trade with patterns. And that's why I would have to give it a C, or, well, you know what? I'll have to do this. I'll put indicators in trash. I think this is the best way. And SMC in D, and patterns in D. Because I'm not going to be putting SMC and patterns at the same level as indicators. Because I do think that indicators are just an easy way to sell beginner traders on how to trade. But I would basically be giving both SMC and pattern trading like the middle. It's not really one or the other. So I will say SMC a little bit higher, and then patterns, I'm going to put it actually lower, right? Okay, so last but not least, we have order flow. Now, this is a little bit more complex, and that's why I would actually not give it a good rating when it comes to beginner and unprofitable traders. I would actually be giving it, I will actually be giving it a C, because I believe it's a very profitable way of trading the markets, and obviously you have to do this with futures or crypto or stocks to be able to actually see the orders that are going through. So order flow trading, what it is that you can see the amount of buyers and sellers that are in the market through footprint charts, which means that if someone buys 1,000 shares, it goes into the exchange and it will print on the chart. Now, with that being said, I think it's too complex for beginners, and so I would not recommend it at all for beginners, but I do recommend it more. You know, I have to put SMC lower. I have to put SMC in D, and I'll keep footprint charts in C. And the only reason I'm giving it a C and not, for example, an A is because this video is for beginners. Because once you become profitable and you understand price action, I do believe that the footprint chart is something that you can go with and become even more profitable. I wouldn't recommend it for beginners. And so I think this is a good tier list in general. I think indicators are not good at all, especially for beginner traders. It's just something that people use in order to lure you into their channel. SMC and patterns, again, I see way more unprofitable traders than profitable traders. Order flow and footprint charts, I would say, is in a C because I see a lot of profitable traders that use it, yet I do believe that it is too advanced. Raw price action depends on the person that is teaching you. In ICT, I do have to put it at the top. And again, I do believe that it is S tier if you are able to follow the right footsteps. Now, let's go into markets because this is where a lot of people then end up losing, because you see so many like Forex signal providers that all of a sudden are only trading gold and they're making like $1 million positions trading gold. And let's talk about gold and silver directly. I'm actually going to put gold and silver in the D category. The reason why is because for beginners, I believe that it is too volatile, especially gold. And the other reason why I would put it in D is because a lot of traders come into the markets believing that they will get rich by trading gold and then just end up blowing the account. And so I would say gold is good to trade, but I would not recommend it on beginners because, again, it's too volatile. And if you want to trade gold, then very likely is because you are wanting to get rich quick, and that is just going to lead you to blow your account. Now, Forex, I have to put Forex in S tier. I will explain why. So Forex, what happens is that it's open 24/5. So you're not going to have big gaps. Like the price action is going to be smooth, but you're not going to have too much volatility like gold or like indices, which we are going to talk about, but you're going to have enough volatility to see the market play out. And the market is going to give you time to execute. It's going to give you time to learn from price action, while gold is just erratic for a lot of traders and they will get caught out. Forex just has the perfect volatility for beginners. And so I would say that if you are a beginner, trading euro dollar and pound dollar is the best thing that you can do. Now, indices, I'm going to put it in a B tier. I absolutely love indices. They move very clean. And I'll actually put it in A. Because I'm looking at the other ones and those are not going to go to A. And they are worse than indices. Now, the reason I like indices is because indices, they have a particular time that they are moving, which means you're going to have more freedom. But the problem with indices, the reason I'm not going to give an S tier is because they're very volatile in a specific time period, which is when the market opens, you'll see a lot of volatility. It's the type of volatility that is hard to guide yourself through. And so I would say that if you are a beginner, indices are good, but they are something that you should be doing once you find consistency with FX. So indices, very good, but I would say that FX is still better given that indices are very volatile in a specific time period. Now, crypto, I'm going to give it a B tier. The reason I'm giving crypto a B tier is because crypto is very volatile and very one-directional based once in a while, but it's extremely volatile. Even recently, I have really good crypto trades and then they just completely reverse and I get taken out for break even, for example. So crypto is very volatile and it really has its phases of just being range, and then boom, like 2 weeks of volatility, take advantage of it, know how to trade a trend. And so it does get a little bit harder to trade crypto. I wouldn't completely recommend it to beginners, but I think that the B tier is really good when it comes into crypto. Now, commodities, I'm going to add it with gold and silver. I don't think that commodities are that good for beginners. I haven't seen that many commodity beginner traders being that profitable. And last but not least, to end this, stocks, I will give it a C tier because, again, stocks, they have a particular time period that they're open and usually they have a lot of gaps and price action is a little bit harder to trade. And so personally, I don't really like stocks. And so that is really it. And I think that this really is a good list, given the fact that this gives you an understanding of why maybe FX is better for beginners than indices or crypto or stocks. And let me tell you, once you become profitable with FX, I would tell you to explore indices, because some of my big trades were done on indices. Like my biggest trade so far was a trade on NASDAQ. One very big trade of mine was already done on crypto. And so with that being said, there is a point for all of these, and you will understand that once you become profitable, once you master ICT, once you master raw price action, you will be able to apply it in any market that you might want. And then once you're profitable, you will want the volatility, because you will want a higher risk reward. You will want the higher dollar amounts. And that's where you will go into the indices. That's maybe when you will go into the gold and the commodities and even the crypto. So with that being said, I really stand by this chart, I would say. If there's anything that I missed, leave it in the comments. Maybe I'll do another one of these, but I would really stick with all of this that I just mentioned. So let me know if you agree. Let me know if you don't agree. I know a lot of people are going to absolutely hate that I put ICT in S tier, but you have to understand, yes, I'm a little bit biased given the fact that I'm a very profitable ICT trader. So with that being said, if you want to learn from me, then check the first link in the description. It's called The Simple Trading Edge. We focus on a lot of the fundamentals is ICT trading. We trade FX, we trade indices, and we are very profitable in the Discord. So hope you guys enjoyed, and I'll see you in the next one. Peace.